Yo, welcome back to another episode of Mailbag Monday. I am your host, Jack. I've got my dad, Dollar Bill, and I've got my best friend, Dylan. How are you guys?
I'm great.
Happy to be here. Happy Monday, gentlemen.
I won't dox too specifically, but we had a Dollar Bill birthday sometime recently-ish that was celebrated. Happy birthday, Dollar Bill. How was it?
Excellent.
Did you guys do anything fun?
Well, if you're like me, you've got at least you probably get at least 2 Bear jerseys or T-shirts or posters or something. Because when you got a fall birthday, that's where all the excitement is in Chicago, right?
Yeah. Not last night.
I actually thought we played well last night. That's probably one of the best offenses in the NFL. Held them to 19 points. I don't think the Bears have had a good enough offensive line to be competitive in this league since I was born, and I'm 30. So just unfortunate. I mean, I don't know what you're supposed to do. First of all, we're going to get you want to talk about the value of assets. If you own something like a lot of Bitcoin or a lot of anything of value, you have to protect it. We talk about self-custody on this podcast. If you draft Caleb Williams, you have to protect him. He's going to get killed. So a weird, probably not perfect analogy, but I would like to see the Bears self-custody Caleb Williams and secure him a little bit better. I mean, we're just not going to be able to run an offense and win football games. Yeah, we'll see. I mean, the Bears are more exciting than they've been in a very long time, probably since that 05-06 Super Bowl run. So 1 week at a time. Okay. Well, with that, a happy birthday, Dollar Bill, to a Dollar Bill segment. What's going on in financial markets? Still get long, get paid?
Yeah, financial markets are going higher. I got the easy job on this date, 9/16/23. Oh, these are notes. I didn't know if we were broadcasting yesterday or the day before, so I might be a day or two off. I actually think these numbers have gotten a little friendlier. The Dow was 41,550 is a 20% year-over-year increase. Gold, which that's a hell of a year, but not compared to gold. Gold on this date last year was 1,946. Now 2,580. That's up 32.5%. I used the Case-Shiller to track real estate, but I don't believe it. I don't think it's liquid enough, and it is up merely a fraction. But anyways, we got 49 days until a U.S. election with strong double-digit percentage gains across multiple asset classes. As you know, that looks inflationary, right? But the CPI year over year was last print we got on CPI was friendly. You remember, up 0.02% for the month of August. I think the market was looking for maybe a tick worse than that. So that is year over year up 2.9%. So assets are up 20%, 30%, etc. And consumer prices are up 2.9%. That reminds me, that's inflation. It's only the inflation in the good parts, though. It reminds me, I know you like old grain analogies, but, when it comes to the summer growing season, everybody on the trading floor is hoping, for a drought, dry weather, gets more excitement, more opportunities. So it's a little bit deflating when it starts to rain. And somebody would always say, yeah, but it's not raining where we need it. The crops are still stressed in certain places. In other words, it's only raining in the swimming pools, right? It's only raining where we don't need it. This market is inflating, but it's only inflating. It's not inflating it's only inflating where we need it. It's not only the good inflation. It's only raining in the swimming pools because CPI is only up 2.9%. Like I said, 49 days till an election. I'm still trading aggressively from the long side. Get long, get paid.
All reasonable and all fair. I think we're going to talk about it in a bit, but I'd be curious your opinion on gold. Seems to be leading Bitcoin this time around. There's all sorts of noise about that. I debated with Peter Schiff that this actually happens pretty much every single time. But what's the dollar bill take on Bitcoin's performance relative to gold making new highs? Why isn't Bitcoin making new highs, dollar bill? What's up with that?
I think, first of all, the gold has pretty much underperformed ever since I've been given margin calls. And so if it is finally breaking out of what for me is a career-long underperforming range, then I certainly don't want to be on the short side of it. I mean, you can't sell something that just made a 3,000-year high. I'm finding it's impressive. The price performance is impressive. Congratulations. As you know, we had a couple gold bugs on your old Little League team. That might be a time if you run into one of those guys. That is a nice year. My opinion, of course, Bitcoin just does everything better than gold. If you're looking for scarcity, you're looking for asset, you're looking for purchasing power protection. We're in clearly a period of asset inflation that, like I said, a combination of too much fragility, too much liquidity risk, an election coming up. I just don't think monetary authorities are in any position to put any discipline on what we're seeing inflating here. The fact that it is inflating gold more than real estate or even the Dow or Bitcoin, I just think that's more of a pure monetary signal. Bitcoin, remember, Bitcoin, just given its history, has a lot of seizures, and there's a lot of seized Bitcoin assets, and from failures, Mt. Gox's, government interventions. And I think, right, isn't that what we're seeing? Isn't that the debate that's even hitting the presidential election, is whether we should be liquidating our seized assets or whether we should be keeping that as some kind of strategic reserve, right? But Bitcoin feels heavier than gold. And I think the culprit, right, is seized asset liquidations. No, the gold has been the star, and it is outperforming. But we're both on the same team. I mean, this is, whether it's gold, Dow, real estate, I think they're all telling the same story of over too much debt-driven currency debasement.
Yeah, I agree. I also think people just need to chill out. This happens every Bitcoin cycle where hash rate leads the price almost always, meaning the difficulty to produce new Bitcoins goes up faster than the price does. I think people are speculating on the expectation that the halving is going to cause new price discovery and higher price momentum, and people plug in more miners. And what that usually does almost always is it makes the smaller miners puke on themselves and have to sell all of their Bitcoin. So you usually, just for context, we talked about the 2017 bull run last time. Just so everyone knows, the halving that cycle was in 2016. I think it was April, May 2016. And then, just so everyone knows, the all-time high at that time was $1,200, $1,200 per Bitcoin. That was made in 2013. And then Bitcoin tumbled and crashed, multi-year bear market. And the halving was either early summer, late spring 2016. And then Bitcoin went from a couple $100 to $1,000 and didn't actually make a new all-time high and didn't actually go on the bull run to hit 20K until 2017. So it didn't really start moving until a year after the halving. And what you usually see is hash rate leads the price. When it gets more difficult to produce Bitcoins, the miners that aren't very well financed start to fail. And before they fail, they sell all of their assets in an effort to stay alive. So you see not only selling pressure from seized coins and legacy holders that have to puke, whether it's due to the law or bankruptcy or whatever else, but you almost always see smaller, less financed miners have to kind of give in and tap out before the bull market starts too. And these bull markets usually start, this was the first time we saw all-time highs around the halving or before the halving or shortly after the halving. And so I don't know, this is like pretty normal to me. And I just for whatever. I mean, people are going to speculate on elections and gold and government deficits, but just as an OG Bitcoiner, just some context, it's pretty according to schedule. I think Hashrate right now prices Bitcoin at 80K. It costs like $80,000 to produce a Bitcoin right now, right? And so Hashrate's leading, and so miners that aren't well financed are puking. It's just all anyway. Perspective.
Yeah, on that, I mean, if there's looking for a seasonal tendency, looking for an election cycle tendency, looking for Bitcoin patterns to fit into halving cycles, I think an asset that is 14 years old and really only 10 or 12 of it where there was enough liquidity or reliable price signals. Remember, when you got here, the leader was Mt. Gox, and that was a phony price signal. They didn't they weren't actually transacting in Bitcoin. So I think you've got maybe 10 good years of a price history, and in my opinion, that is not enough time to draw any correlation coefficients or draw any conclusions about what Bitcoin typically does during an election cycle, during a halving cycle. Like I said, I can have as much fun with numbers. If I crunch these numbers enough, I can make the strong case that Bitcoin has a positive correlation, right, with days of the week that end in Y, right? Because I can, right? I mean, you can just torture the, what's that called? Torturing the numbers and torturing the data until it confesses. You can find correlations if you dig hard enough, but there's just not enough price history. Bitcoin's like I said, you got about 10 years of liquid price history to try to draw conclusions about how this asset behaves during halvings, during elections, during inflationary periods. There's just too many cross currents. I think that's why I always take a big step back. And I think Bitcoin is just broadly tracking the liquidity, the debt-driven liquidity that you're seeing across stocks, metals, and real estate.
I agree. It's just sometimes people are like, what? You think Bitcoin can 5 to 20x in the next 12 months? You're an idiot. What makes you think that? Because I was here when it did it last time. That's why. I've seen it before. So that's why. And yeah, it happened a year after the halving. Hash rate led price, all this stuff happened last time. So it does, to my dad's point, it doesn't forward project any certainties this time, but it's just helpful context.
It does. You can, but there's just not enough history. 10 years, 14 all in is just not enough history, I think, to make any conclusions on where we are in any cycle. That's why I think the cycle is the story is the liquidity. It's a debt-driven, hard asset bull markets. I don't think that any of these things are in a particularly tradable cycle right now.
Yeah, I don't disagree. It's just context for the people that got into Bitcoin 1, 2, 3, 4 years ago, just so you guys know. None of this is abnormal.
What do you guys think about the results of the election and the impact that will have on asset prices? Call it short-term, medium-term, long-term. If we see, a transfer of power this year to the Democrats, do you think that everything crashes? If we see Donald reelected again, do we think everything pumps? What do you guys think of that? Especially in lieu of the fact that we had a debate this week, which I do want to cover as well. Get your guys' opinions on that, but. Yeah, curious what you think, dude.
I think I answered this one once before. I mean, the advice I always got, trading is if there's an event on the horizon that is going to determine, right, the market for the coming months. It's a crop report, an election result, right? And there are two ways to play that, unless you got this was specifically advice for the major economic reports, like the unemployment report. That's going to set the tone for for the Fed meetings, for the economic data, for the market tone, right, for the next 6 weeks. So, and we'd always say, okay, I've run small businesses my whole life. The Department of Labor has never called me up and asked what my hiring intentions are, whether I'm right? That's a blind guess. So you're going to set the tone on a, you know, and that's kind of the way I feel going into a 50-50 election. That election is going to set the tone for how markets are going to trade. And it's right now, as far as I can tell, it's a 50-50 toss up. They're two, either, like I said, either trade through it, trade the way you were going to anyways, whatever you're using moving averages, you're using, you know, you're timing the halving, whatever it is, ignore it, either ignore it or even up and come back 2 months later. Because that's, I mean, that's in my opinion is the fine line between speculation and gambling. Unless you have some type of insight on how this election is going to unfold, then either, like I said, either trade through it or even up and come back around Christmas. I don't know how you, what do you guys probably have a better feel. You guys talk to customers more than I do. I'm just looking at the screen. Yeah, you know, are people anxious? Do you think this market is going to have the standard for a market not knowing what to do through an election, I thought, was that Bush Gore, where we went back and forth on who won that election, I think like 4 times that week. And markets had, you know, there were strong beneficiaries to Bush over Gore. So you'd see whether it was energy markets, stock markets, financial markets were whipped back and forth. So again, that would be my standard for just even up and come back after the dust settles.
You got any opinion here?
Not that I haven't already said. I don't think it matters who's president. Bitcoin's going to continue to go up because the dollar is going to continue to go down. Doesn't really matter who's president of the United States. I've been pretty vocal that I think we're going to have a sovereign debt crisis and the deficits are just too big. I think that markets I think people are just waiting on the sidelines right now. The thing that people underappreciate sometimes about financial moves and liquidity from financial authorities is they'll tell you in plain English that they're about to inject liquidity. So I don't think markets really like to try and lead them that much. Because listen, the thing that would be bearish for Bitcoin in the short term is if we entered a real prolonged, painful recession. It doesn't matter how strong your asset is. Everything sells off in those type of moments. And because people sell what they can, not what they want when there's pain. And so I think that there's general concern about a recession, and a recession that would be very painful, very bad. People talking about metrics that draw it to the Great Depression and all this stuff. And so my overall opinion is there's no need for financial markets to assume that financial authorities are going to prevent a recession by injecting a lot of dollar liquidity and pumping assets until they literally tell you they will, because they will. Janet Yellen will come out and say, I'm going to reinstate the ABCDE Act in order to prevent Putin from farting. And then everyone's like, oh, okay, got it. Perfect. Assets are going to go way higher. So I think everyone's just waiting. We're waiting to see what the Fed is going to do. We're waiting to see what the Treasury is going to do. We're waiting to see how they're going to treat this election. That's how I viewed Bitcoin. I mean, Janet made some pretty critical dollar liquidity decisions in late 2023. And I think the repository that she was using to inject dollar liquidity started to bottom out and tap out in the spring of 2024. And that's when you saw Bitcoin go from 20 to 70, 20,000 to 70,000, just like that, right off of what Janet Yellen was doing. And then since, she hasn't made any decisions. And what has Bitcoin done? It's basically chopped sideways from March, April to today. And so I think people are like, well, if it, you know, I don't want to be super overly leveraged assets if the US is going to let some recession pain inflict on the markets. So that's my overall opinion. Doesn't actually matter. It matters about dollar liquidity. It matters primarily the Treasury. I don't think the Fed cutting 25 basis points is going to do much for financial assets. As far as the actual candidates,
if they get as soon as they cut 25 basis points, then we get to start pricing in the next 25.
Yeah, I mean it's the right direction for sure. I think it matters more to probably the government financing their debt, these rate cuts, than it does. Powell's not making any decisions based on inflation metrics or anything like that. I do think that financial markets prefer Trump. We know that at this point. Bitcoin and financial markets prefer Trump. Whenever something good happens, Bitcoin and financial markets trade up to Trump. And whenever something bad happens to Trump, then they trade down. And if you want to see if something was good or bad, like the debate, you can look at financial markets. Like Bitcoin traded slightly down, financial markets traded slightly down. So I don't think the markets loved his debate performance. And that's not my opinion. That was the market's opinion. So I think, from my understanding, I'm not a politics guy. My position is Bitcoin can help solve a lot of the world's hardest problems, and it doesn't matter who gets elected. That's just my position. So I'm a political novice here, but I do, if I understand Trump's policies correctly, he wants to weaken the dollar purposefully to be more competitive in exports, I think. And he's going to, you'd think, well, if you're going to purposely weaken the dollar, isn't that going to cause even more inflation? And his inflation fighting is through tariffs. Is he protects the price of our lives by being mean to other countries, basically. And so that's Trump's stance, is I'm going to cut your taxes. Why would you cut taxes? Why is that good? Is because it spurs more growth. If people have more money, then they can spend more. They can start more businesses. They can do more shit. And so Trump wants to cut taxes to drive more growth. He's going to weaken the dollar to make us more competitive in exports. And then he's going to just put a gun to other countries' head with tariffs to protect the cost of our lives, which is another way of saying taming inflation despite a weaker dollar. Financial markets love that plan. That sounds great. I pay less taxes to the government. I don't have to deal with any inflation. The cost of living is not going to go up, and the dollar is going to weaken. So all of my financial assets are going to go higher. And so I think that's why they prefer Trump. Whereas the Democrats don't seem to have any financial literacy or plan. They're more about, what is the like political term? Social justice or something. They love giving you free shit. Free college tuition, free medical, free retirement, free this, free that. That's their weaker dollar. They end up inflating the money supply tremendously by giving everyone free stuff. But I don't think financial markets love them nearly as much. And they want to tax the rich more, and they want to, Kamala is constantly talking about, I hate the rich. I'm the president. I grew up middle class, or whatever she says, right? So,
well, you know, I mean, if you want to know taxation or economic literacy, or is there any reason I should listen to your proposal? You can just start and end with the proposal to tax unrealized gains. That's got to be the dumbest thing I think I've ever heard out of a policymaker. Punishing capital, first of all, you know, that's the engine of job creation. Governments don't create wealth; they can only, but to then target. I mean, like it almost is. Like I said, why their governments unfairly tax cigarettes? They're, you know, sin taxes. They do use tax policy to incent behavior. What incentives are you telling us now by doubling unrealized capital? So creating capital is where you want. That's the new sin tax. That's the new cigarette tax. It's just insanity. And as I've said, even if you're willing to swallow that, like how in the world it could be implemented? Because if you're going to try to send me a bill for anytime an asset increases, then by definition, that includes, you know, assets decreasing. That puts the federal government in a position of knowing how much a sculpture is worth, a classic car I bought, a piece of artwork. I mean, there's just, I suppose if it's publicly traded, how are you going to figure out my unrealized gains on a rental property I own? Are you going to go to Zillow? I mean, I don't know how you guys are planning on implementing the unrealized portion of this grand tax plan, to me, it's a non-starter. It might be, like I said, might be the silliest thing I've heard a policymaker ever propose.
It's just opposing. Well, again, I'm not an expert here, but in my opinion, it seems just different approaches at financing what both parties are running on, which is spending more money. Trump wants to finance spending more money by increasing the tax receipts. You know, the main way that the government finances their debt is our capital gains tax. That's another reason I'm so confident that we're going to see probably the greatest asset bubble in the history of humanity, is because if they're going to have the highest deficit and debt in the history of humanity, that has to correlate with asset prices, because that's the only way they can afford it. What happens is they send your S&P 500 portfolio, your real estate, your Bitcoin, your JPEG, your NFT, they send everything to the moon. And then you sell it and you pay them, you know, what is it, 25, 30, 40% taxes. And so Trump's position is, I'm going to debase the dollar. I'm going to have you pay less taxes to me, spur more growth. Your cap gains should shoot up tremendously. And I'll be able to finance my government spending through growth and through asset inflation. Now, the Democrats, I don't think, seem as literate. And they're like, we're going to finance our government spending by taxing unrealized gains on rich people. And that just, but it just is, the point is, the point, in all seriousness, not to pick fun at sides, the point is they're both running on spending more money. Both the Republicans and the Democrats are campaigning on spending more money. In the short term, if Trump wins, I think financial markets and Bitcoin will be more excited. That doesn't matter, though. They're both going to spend more money. They're both going to increase the supply of the dollar. They'll both send Bitcoin and other assets higher. So I don't think it actually matters. What I care about, like, doesn't matter who wins. I'd like to see Ross free. I think if there is a definitively scarce, finite financial asset that is the best performing over the last 15 years, I'd like to see my country own some. Seems really logical and sensible. I don't know why we wouldn't. So I'd also like to see the country support innovation here in America for the greatest, most valuable new tech sector in the world. So I don't care who wins. And I think no matter what, it sends prices higher.
Yeah, I think two data points to support the dollar debasement theory on Bitcoin. If Bitcoin truly is the best expression of fiat debasement we've ever seen, then there are two metrics to keep an eye on. One, during Donald Trump's presidency, federal debt increased by $7.8 trillion. That's a lot of debasement. Under Joe Biden, the federal debt increased another $4.5 trillion. That's a lot of debasement. I think both candidates are running on expanding government spending.
But you got to understand the context there. That's true. But the context there is that Biden's administration was trying to go the opposite way, because there was so much monetary expansion. With the raising interest rates, they're trying to decrease the supply of dollars to bring down inflation. So the fact that they still almost hit 5 trillion in a era of trying to go the opposite way is telling. And the other thing about debt is it compounds quickly. So you've got interest payments on it, and in order to finance existing debt, you need new debt. I mean, take out the classic age-old, like, why you don't aggressively spend on a credit card, because you know the term, you can get trapped in credit card debt, or in order to finance your debt, you need more debt. And so it is remarkable that in Biden's term, he had really one job for the majority of it, which was to go the opposite way and decrease the supply of dollars and have a much tighter monetary policy. And they still piled on record amounts of debt. It's crazy.
I think interest on debt is the second largest line item we have in the budget, next to military and defense spending. And I think it's projected to overtake that at some point.
Yeah. I mean, one of the better metrics that I follow from some of the macro journalists and writers is what percentage of our debt is our asset capital gains tax receipts, because we get dangerously close to spending more on government financing than we bring in receipts, which at that point financial markets are going to lose their mind. It's like mathematically untenable. Like you cannot do that. And that we literally won't be able to finance it. Like either the world's going to fall apart or financial assets have to go higher it is a funny dilemma that they're in. Like when people say the S&P 500 has to go higher, it's because every one of Americans' savings account is in the S&P 500, and the government can't afford for people's savings to go down because they won't be able to pay the government any taxes. And so it's like you should own assets because the government needs them to go higher to afford their debt. And then obviously of all the assets you could own, there's one that's better performing because it's designed to be. But it's hilarious. And it's also very sad for the people that can't afford assets, you know, or can't open a brokerage account or whatever. Obviously everyone can own Bitcoin. It's part of the innovation, but there's a lot of the country that's trapped in these dollars.
That's hilarious and sad. That's I think that's well put. If you want to, I think I said earlier that the notion of taxing unrealized capital gains is perhaps the dumbest thing I've ever heard a policymaker suggest. But now that you mention it, fighting inflation by blaming corporate price gouging and suggesting to cap prices, that actually might be dumber than because everyone knows that doesn't work. If all I had to do was pass a law that said, you know, consumer price inflation, retailers are not allowed to raise their prices beyond my target, I just solved inflation. That's what, you know, to take aim at corporate price gouging. Guys, if I'm a shareholder of a corporation and you've got some pricing power and you're choosing not to do it just because you don't want that CPI number to look too bad, no, that's not your company. That's my company. I'm the shareholder of it. And that is, you cannot blame, you know, a capital markets for inflating, for price gouging. That's just another word for doing what they actually have to do. And that's the dumbest thing. So yeah, that's your economic policy making suggestions for how to combat the inflation they cause. We can either start taxing unrealized capital gains for you rich 100 millionaires that are skating, or we can just mandate that retailers don't increase prices. Again, you take your pick on which one is dumber, but neither idea has ever worked in the history of markets.
Well, they're all dumb. I mean, Elizabeth Warren's housing, she said the reason housing is getting more expensive is because there's a housing shortage. We need more houses. And it's like, well, the reason that's not necessarily true. There's someone who's paying rent in a house right now that is really frustrated that they can't afford it. It's not going to solve their problem to create another house. They're in a house. There's enough housing for people. It's not that people are on the curb. There's plenty of houses out there. In the same way that there's plenty of Bitcoins. We don't need more Bitcoins to scale to the humans.
There's also farmland. Like I say, anybody that wants to blame the wheat price increase on the war in the Ukraine should be required to drive their kid to Kansas, for homecoming, and, drive across Iowa, Illinois, Nebraska, Kansas. I don't think we're running out of wheat, and I don't think we're running out of undeveloped real estate. I think, right, the problem is monetary. But it is funny how policymakers will somehow come up with a plan that can actually make it worse, like price caps and unrealized profit taxing.
Yeah, but I mean, anyway, long-winded way of saying it doesn't matter who wins. I think markets have made it pretty clear that in the short term they prefer Trump, but in the long term, Bitcoin's got to go up because the dollar's got to go down.
I like it. We got about 10-15 minutes here. Let's shift gears. One report that seemed to blow up crypto and more specifically Bitcoin Twitter over the weekend was this notion of Coinbase giving IOUs to BlackRock, suggesting that there is some flexibility there on BlackRock and Coinbase's side to suppress the price of Bitcoin. If this is true in this shocking report? Brian came out and addressed the rumors. There's a ton of speculation going on around this topic. Do you two have any thoughts on the topic? And if so, what are they?
I mean, I remember the exact same arguments when Chicago exchanges were introducing derivative products on Bitcoin. Was CME whales are going to now we have a vehicle to suppress the price. I don't know where that, I don't know why in the world Brian Armstrong would be involved in some project of price suppression. Plus all those things are also myopic, right? I mean, isn't Bitcoin, far more integrated into economies like China, India, and I just don't see, using derivative products or conspiring with Wall Street to suppress the prices has never seemed credible to me.
I don't know. Is it credible where it started? Who started this rumor?
I'm not exactly sure where the initial source is here. I know that Tyler Durden, which is a popular account, had a good amount to say, and there was a publication in an article that, again, I don't find this to be the most credible news. It certainly wasn't the Wall Street Journal. I'll say that.
Not that they're credible either. Yeah, I mean it's I think stupid, waste of time.
It's also hard to manipulate an asset that is on an open blockchain. I mean, if I'm like we've discussed before, in the history of cornering things, you got to kind of do it on the sly. Bitcoin is almost impossible to do. I mean, you can disguise it pseudonymous, but it's still aren't. I mean, there's a whole industry that is very good at tracking on-chain activity to determine if there's anybody acquiring or suppressing or playing any kind of games with markets. I think Bitcoin is the last thing I'd try to do that to. As I said, because of the open source, fully disclosed nature.
It doesn't, but you cannot suppress a market where the majority of the supply is held within the participants. I talked about this in the Peter Schiff debate. The concentration of gold is so severe that in theory, it's easier to manipulate that market. With Bitcoin, how much Bitcoin is Coinbase custodying right now? Like 1 million, 2 million? I mean, you're talking about 10, 15% of the total supply max. And so that's not enough. And things like IOUs, just to walk through what would happen. Let's say Coinbase was allowing someone to sell Bitcoin that didn't actually exist. That would drive the Coinbase spot price on the exchange lower. And then what people would inevitably do is be buying Bitcoin on Coinbase and selling on other exchanges. Eventually, the point is, I think these financial markets figure it out. I don't think Bitcoin can be manipulated. I think that Satoshi distributed the currency far too well, too early. And I also don't think ETFs or BlackRock introduce anything new, by the way. I don't know. This is kind of a stupid question. I don't get the rumor. It seems ridiculous and waste of time.
Well, it seems like this could all be solved if they provided proof of reserves, but they came out, I believe Brian came out and said that they won't do that.
Why would proof of reserves solve the ability for them to let someone sell fake Bitcoin?
Because if you could prove out the reserves, there wouldn't be fake Bitcoin to sell.
Why? Brian can just make BlackRock's balance internally on the system higher than what it actually is. So what? Coinbase technically has 2 million Bitcoin. how are you able to internally validate how many of those are BlackRock's?
They would be able to say that this is, they would proof out that the reserve that they're holding for BlackRock, right?
No,
Am I getting
that's
that?
that's not how it works. Not every single customer has their own reserve within Coinbase. That'd be awful. You'd have to have UTXO management for each customer. The best way to custody the Bitcoin is manage the UTXOs as if it's one giant wallet and internally ledger who owns what. So they can prove that they have X amount of Bitcoin, but proving that they're not giving BlackRock an egregious line of credit to sell Bitcoins that aren't real is not totally possible. But the point is that'll never be possible. Like you're gonna have to trust institutions. That's fine. But the point is, if the asset and the currency is distributed in the marketplace and can be held by the individuals, then it's tremendously difficult, if not impossible, to manipulate that market. You know, and you could, I mean, if I'll say this. If the market's actually concerned, then everyone can withdraw from Coinbase. And there'd be a run on the bank. So I just don't think the market's actually concerned. I think that this is a reaction to Bitcoin's price feeling suppressed versus things like gold. But I'm yawning at this because, like I said, I've been in Bitcoin for a long time and I've seen this before. Like price discovery tends to lag after halvings. Smaller miners, there's lots of natural sellers in after halvings, particularly miners. They're getting less of a reward, and if the price doesn't immediately react, they puke on themselves. So it's all normal. And this rumor seems to be justifying some speculative conspiracy theory as to why someone's margin long isn't working out for them. That's my opinion on it.
Well, wasn't FTX able to do this quite effectively, actually?
Yeah. And what I just went through happened. People got concerned. They withdrew the Bitcoin. There was a run on the bank.
Right.
The markets fix it. And then why is that possible? Well, one, you can actually withdraw your coins on your phone. For gold, you can't withdraw it on your phone. And also, you can't withdraw substantial amounts of gold. Where are you going to put it? How are you going to secure it? And then also, the concentrated supply is still distributed enough within the people, where the largest of largest custodians still only hold 10, 15% of the total supply. So it's not nearly enough to corner a market or to have any outsized control. So yes, people have done this before, and then the free market corrects it. And yes, it's painful and such, but that's how the market should be. And then there's a pretty big incentive for every institution that wants to be successful to not do what FTX did. So Coinbase, as a public company in America that's audited quarterly by the biggest capital financial market in the world, that has the biggest incentive for Bitcoin to go up and to not kill their business. But even if there was like some conspiracy that the government was guns to their head and stuff, then the free market will rat it out. If the market's really concerned, there'll be a run on Coinbase, and we'll see how solvent they are. I don't know.
Got it. Rumor unjustified.
In the history of any financial crisis I've ever seen, subprime debt or portfolio insurance or stuff, one of your best protections is disclosure. If the whole market can see how people are positioned and what kind of leverage is out there in the system, what kind of liquidity risks, then markets can price it better. And I just think if you're looking for any candidate for the BlackRocks and Fidelities to manipulate, I would not start with Bitcoin. It's too well distributed, like I said. And what's so interesting is oftentimes, you remember like the MySpace, Facebook argument, a lot of times like the first one is a proof of concept, but then the second, third, fourth participants learn right from the mistakes and build a better system. And you remember how many people thought Bitcoin, okay, proved the concept, but then we're going to get, Ethereum or something that's going to come along. And I think that among the reasons that had no hope is that early distribution. Bitcoin, 50% of the Bitcoins were distributed before the currency had any value to it. So that is going to make it really hard for the BlackRocks to come along 10 years later and amass enough of it to either suppress it or manipulate it or squeeze it. I mean, there's just too many plebs that you don't even know who they are. That like this asset, I said, spent the first 2 years of its life distributing as fairly as you can with no monetary value on it. I think Wall Street's just too late to manipulate. I know what you're saying, it's audited, they're regulated, and that's all very helpful as well. They're public companies, and Coinbase is, is reputable, would never sacrifice their reputation by playing any of those type of games. But they couldn't get away with it anyways. It's too well distributed and it's open source. It's just not a concern that I have going forward.
Agree. Okay. Anything else? I think I'm personally out of time here.
I don't know. 49 days till election. That is, like I said, it's kind of like having your team in the Final Four, right? It's going to be a lot of fun to watch how the markets take. Like I said, you got gold on a 30% year. The Dow, real estate, and now new investment options like Bitcoin going into the like I said, it's going to feel like going into March Madness with your team in the Final Four, right? It's going to be fun to watch.
Yeah, I agree. I think financial authorities will tell the market exactly what they're going to do. They don't like when markets are surprised. They like trying to control them. So they'll let you know exactly what they're going to do. And so far, they haven't said anything. So Bitcoin is sitting pretty patient. So,
well, we're assuming it's going to be gradualist, right? I don't think there's no reason to get out in front. 25-point hikes. All you got to do is start pricing in the next one 6 weeks later, and gradually keep the system liquid enough to at least get you through the election. Yeah, and I think markets know that, and that's why I think we're all across multiple asset classes are just having strong rallies.
Yeah, agree. Okay, well, for the audience, let us know if there's any burning topics you guys want us to talk about next week. Ethereum's been getting killed against Bitcoin. There's probably all sorts of things that we could have talked about. It seemed everyone's always interested in the politics stuff. So keep us posted. We're excited to read the comments. And until next time, every Monday, we'll talk to you.
Thanks, guys.
Get long, get paid.